Hello, ladies and gentlemen. Welcome to today's webinar. Now, whatever we have covered so far for the past webinars, as I mentioned, everything is connected. All webinars are connected one to each other. Hello, one more time from me. I'm Joseph Novichkov, Senior Analyst at GDMFX. Today's strategy pick, we will be using the ADX with a 14 period. First of all, some of you guys might have already used the ADX as average directional movement index. To simplify for you, what ADX is usually used for is to verify the strength of a current trend. And we're talking about directional trend, which is the uptrend and the downtrend. Basically, the sideways direction on the ADX is not corresponding exactly the way we want it, so we're using the ADX to tell us which strategy to use at the right moment on the market and to be on top of every situation. The first I'm going to start with right now is take a brief step backwards towards where we've been so far. Okay, now we've been so far trading with the relative strength index, the stochastic, and the MACD. As you can see, the parameters of those indicators are not changing at all. What we know is that ADX and stochastic are corresponding in one and the same timeline, giving you entries and exits, as you can see here. This is how we are trading the sideways direction. Briefly, as we mentioned, when we have a sideways direction, we can't use the MACD because MACD is flat along the way of this sideways range, which in this case is over here. What does that mean? That means we have a tool, relative strength index, plus stochastic, so we can trade the sideways direction. We're using the MACD, or the so-called moving average convergence divergence, to trade uptrend and a downtrend, plus, of course, observing as an option relative strength index and stochastic for how long is going to stay in overbought and oversold conditions. One more time, I would like to remind you that when the market is trending, whether it's up or down, we know that relative strength and stochastic will stay in overbought conditions for as long as the trade is valid, if of course we're talking about an uptrend, and they will stay in oversold conditions if the trade is down for as long as the trend is valid as well. Fluctuations such as these, as you can see here on the stochastic and the relative strength, those are fluctuations between overbought and oversold conditions when the market is ranging, or the so-called sideways range. Numerous of ways, as we've already covered, which means of how we can recognize range breakthrough. It's quite clear that this is our existing range, and the breakthrough, or the so-called directional movement, we can expect whether from the up or the downside of this range. In this case, we have a breakthrough through the lower level, which brings the price down. And as we can see, for as long as the trend is valid up till here, up till this point, we have stochastic and RSI staying in oversold conditions in this short period downtrend. MACD's histogram is making new highs and new lows for as long as the trend is valid. And of course it's clearly over where the MACD crosses the 0 level. And we're talking about the MACD's histogram. Now, how do we find that the strength of the trend is over? That is why we're using ADX. The average directional movement index is used by telling us which strategy to use. First thing, let's talk about ADX's levels. As we can see here, level of 20, 30, and 45 are the levels they're customized, which we will be using. Okay, if the ADX is below the 20 level, in that case we should use oscillator strategy, RSI plus stochastic. This is for ranging market. And of course, if you want to put an additional indicators such as Williams percentage range or any other oscillators that will basically give you a good indication of oversold or overbought conditions to trigger your take profits. The second implication of ADX is when it's above level of 30. When it's above level of 30, that means we have to use, let me just make it 30 level of ADX if someone is writing that down. 30 level of ADX. We're using trend following technique. All right, we're using trend following when the market breaks above level of 30. It's an early indication when the market to see that the market is going to start trending is when we see the level of 20 broken from the downside to the upside. So we need ADX to be rising to see that the market is trending. A confirmation we're getting from the level of 30, and when ADX is rising one more time and it gets, this is the number 3 point here, how we are using the ADX at level of 45 or above, 45 and above, this is where we should book our profits. It's very important. Level of 45, we're booking our profits. So, ADX is rising from level below 18 and then going above 23. We're using trend following system. ADX declining from level above 30 and then going below 27, we need to be using oscillator system or the so-called ranging market. This is in this case scenario. This is where you can find out as well that ADX is recommending us to use sideways range market techniques. And there is a good explanation here of what the market is doing during that time. Let's erase everything and check out. Now we see that here retracement is about 50% from the beginning. It's even more than 50%, 66. The trend is still sustained. However, the retracement is so far that ADX fell down to level of 20. From where it started rising above level of 30, giving us another opportunity to short. Let's have it here in time, see how it goes. Exactly somewhere from the breakthrough here, we have a rise in the level 30 of ADX. We have in the continuation of this trend, let's mark it one more time. As we already know, this is the beginning of it. Price rising, RSI, MACD stochastic, we'll explain later. Let's just mark those positions first. Clear picture is when the price breaks through that range. We have our confirmation from ADX telling us it's a trend and it's going to be strong because it's breaking above. Another thing, we have relative strength in oversold conditions here. Stochastic in oversold. We already see how the MACD histogram is starting to break a new bar higher than the previous one every time. So this is a definitely triggered short position here. Directional trend, MACD below the zero level. So it's negative, telling us price is going to go down. That's why we're using those levels. One more time, I would like to remind you, for those that missed the beginning of today's webinar, take profit levels here, here, and here as well as here. However, in some cases, when previous highs of the ADX followed by lower highs are telling us that we might be seeing a decline of the ADX, which in most cases is signaling strength, the weakness of the current trend. What I'm trying to say is, when we're seeing highs lower than the previous, it definitely means that the trend will be over. In most cases, we're missing, let's say, directions of 148 pips, for example, maybe even more in some cases. But you need to understand that we cannot catch the full move. That would be pretty much impossible, as well as we're looking for the sure deal. If we want to have the sure deal, we need to play a little more conservative. We need to book our profits exactly where the ADX or any other oscillator or indicator is showing us, because a perfect condition such as this one are not always there on the market. Sometimes this is a case from where the trend can actually reverse directly to the upside with 100% retracement, let's say, somewhere up to here, without showing us that the ADX is going to rise, because in order to rise, it has to fall. That leads us to believe that when the ADX is falling, in a case like this here, we don't use ADX strategy, we're using oscillators, such as this one. Otherwise, there are different counter-trend strategies which might be used in combination of this one. In this case, we're not going to consider an explanation about it, since the connection between the oscillators and indicators on this chart are only showing us which particular strategy to use at the right time. So let's sum up once again for those that are showing up late today on the webinar. First thing, rising ADX means trend following. 2, sideways ADX means oscillator system. That means sideways range. Number 3, falling ADX means we do not trade. Or of course, in some cases, when we see a falling, as I mentioned, ADX, we can see a strong trend on the opposite direction of the previous one. As we have in this case here, we have a downtrend with a correction of 50%, and then a continuation to the downside. Which means if the correction was 100%, we would still see a downside movement of the ADX. Even if we have an uptrend, in which case we surely have to see the ADX rising as well as with the downtrend. But the directional changes, first one to the upside, next one to the downside, the ADX would still be falling. So we have to wait for another opportunity on this particular currency pair. Or if you want, you can trade another one which gives you the same signal. Now, the one thing I need to mention here one more time, daily chart only for this particular system. It never fails. It can only fail only because it's used at a wrong time. Wrong time frame. On the smaller time frames, you can still use relative strength index and stochastic plus the MACD only to verify entries, but ADX do not use on less than 1-day charts. Now, what we see here, first block here, number 1, sideways market. Block number 2, market is trending. And we're seeing a weakening in the trend on third side of this explanation today, based on this ADX system. So this was everything that we've been learning so far from the beginning of the month. We've been talking about the psychology of trading, how we should behave, and how we should protect ourselves by trying to domesticate a little bit our emotions. We saw how we're working in a directional trend by advanced strategies, by the MACD, sideways range, RSI, stochastic, plus Bollinger Bands. And of course, today we are talking about the ADX pick strategy system. It gives you exactly the strategy that you need at the right moment in time on the market. Another thing, a lot of people actually were asking about the previous webinar, which was Elliott waves, about the counting of those waves. Everything is based on the Dow theory of the trend following as well. It's only counted the waves in the direction of the trend and those that are counter the trend. Depending on the time frame that you're looking at as well, we're recognizing grind supercycles, and minors are down to smaller time frames, 15, 31 hour charts. Those are the questions that are flowing in today, the way I see them here in the chat. Now, please, I just want to remind you one more time. Next week, we're going to have our question and answering seminar. I would like you all to participate. It's important not only for your personal involvement on the market as professional traders, but it's important for me to find out what you have learned, what's there more to press on, so I can make those webinars a little more easier for you to understand. I mean, today's presentation was quite big. At the last few minutes, I've just cut it down to the most important things that you need to know. I understand that in most cases it's difficult to grasp the whole procedure. What I would advise you is observe the chart for some time. Try to follow what the ADX is telling you. It will tell you which strategy to use at the right moment. Everything is in front of your screens. Now, when the market, one more time, is moving sideways, we can simply see it, but also we can get clues from the ADX indicator, which stays below the 20, or slight fluctuations above it, but it's definitely staying below the 30 level. It signals of which indicators we should be using to trade in these conditions. We use everything but the trend indicators. We're using Bollinger Bands. The price will bounce off the Bollinger Bands levels. It's what you see here. It stays within the range. Here, 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 here again, here, throughout the whole movement. But once the price starts trending, you can see them going outside of the range. Second, the relative strength index reacts to oversold and overbought zones, right? There you go. Here, 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 here. Stochastic. Stock crosses, especially those in oversold and overbought zones, such as these. You see them here. So easy. And as you can see from this one, they all give true signals. Unlike, of course, the MACD, which is, of course, it just goes around the zero line. You see how flat it is throughout the whole sideways movement. Crossing back and forth, up and down, it's useless to use the MACD in these conditions. Also, moving averages, which of course I'm only using two at the moment, one with the Bollinger Bands and the other which is 200. The 200 exponential, which is by far the most important one. Everyone should have it on their charts. And I haven't put any moving averages because it's getting too messy on the chart. You don't need them really. They also will give you false signals, and they have to be ignored because they're trending signals. When they have a trend over here, the market is trending, we see that. It's confirmed by the ADX. It moved past the 20 level and it's rising. The indicators we need to use in that system, we have to use trend following strategy. MACD is good. MACD is perfect. Moving averages would be also a good strategy to use. However, in this condition right now, relative strength index over here and the stochastic, they will remain in oversold, overbought zones depending on the trend, of course, if it's up or down. In this case, it's in oversold conditions for a long time, as long as the trend is valid. And unlikely Bollinger Bands, unlike Bollinger Bands as well, the price won't really obey those boundaries anymore. It will go outside of it. So we don't use BB, Bollinger Bands. We don't use them. Only ADX, MACD. That's all you need. So let's see when the ADX starts falling down in this final chapter here. The average directional movement index is falling now, which means that the trend is gone, or at least temporarily. Now, we don't really know whether it is going to continue or not, so we seek advice from indicators, but not a single one, a group of it, to find out whether there will be a continuation or a change in trend direction. We can see that the MACD keeps building the histogram, so we can rely that the trend might continue. So we can keep shorting at every high. We can see that in most cases, relative strength and stochastic, and in some cases they obey their boundaries, but in some cases they don't. So it's not a very certain situation of what it's going to do. It's better to wait it out. Find another instrument. It's the more conservative way. I really hope that you managed to grasp this today, ladies and gentlemen. It's a really important topic, as this is pretty much where we're closing the whole chapter, the whole month. If you have any other questions, I will remain at disposal, and I will make some time to answer those questions if they come up later onto my personal email or to the support department. However, you will have that chance to express your opinion or share your experience so far with those kind of strategies, or you have any questions, something to modify, or there is something you don't understand. This we will do next Wednesday, when we can freely share anything that we think about the company, the trading systems, your experience, your fears, anything about psychological point of view for the market as well. Right now, this is about today's presentation. It's not a big one, as every time we're adding a little bit more, we're piling up our chart to look better and better. Let's first clear this out. I want you to see how it looks, so you can make the same template on your charts. First of all, we're going to zoom it in a little bit. We're going to see how it looks from a close range. The same moment that we were describing, the sideways range, the downtrend here, looks much better now. I will have to remind you one more time, if anybody came late today into the webinar, you will have the chance to review this webinar one more time, or as many times you want, after we moderate today's recording and attach it into our YouTube channel. I believe that would be will be done as soon as Monday's afternoon. So until then, try to plot those oscillators and indicators in your chart, scroll back in time, check it out, and see what you've missed by not using it. Thanks a lot, ladies and gentlemen, for being here. This is all for today. I'll see you next Wednesday. Prepare your list of questions, and we will talk about all of your worries and concerns over there. Thanks. Have a beautiful weekend. Bye-bye.